Metaplanet Q1 FY2026 revenue jumps 251% YoY to Y33.08B. Metaplanet reported Y3.008 billion in Q1 FY2026 revenue, a 251% increase from the same quarter a year earlier, the Tokyo-listed firm confirmed via Cointelegraph on May 13, 2026. BTC Yield, the company's internal metric for per-share Bitcoin accumulation, reached 2.8% quarter to date. The result extends a streak of large year-over-year jumps for Japan's most prominent corporate Bitcoin treasury vehicle, which finished FY 2025 with Y8.9 billion in revenue and a reported 738% annual growth rate. The numbers behind the headline three figures matter in the Q1 release. Revenue, Y3.08 billion, up 251% versus Q1 FY 2025 BTC Yield, 2.8% quarter to date. Measured as Bitcoin per fully diluted share growth quarter reported fiscal Q1 FY 2026, ending in the spring quarter, under Metaplanet's Japan-aligned fiscal calendar. BTC Yield is not a GAAP figure. It tracks how much the firm's Bitcoin holdings have grown on a per-share basis after accounting for any share issuance used to fund purchases. A 2.8% reading in one quarter means existing shareholders saw their proportional claim on the Bitcoin stack grow by that amount, without needing the spot price to move. For comparison, Strategy, formerly MicroStrategy, reports a similar metric, also branded BTC Yield, and has used it to defend share issuance as accretive to per-share Bitcoin exposure, rather than dilutive. Treasury Strategy drives the income statement. Metaplanet's revenue is no longer dominated by its legacy hospitality business. The bulk of the line item now comes from activities tied to its Bitcoin holdings, option premium income from selling cash-secured puts and covered calls against its BTC position, lending, and ancillary services built around the treasury. That mix is why a 251% revenue jump is plausible without a corresponding spike in operating headcount. The treasury itself is the product line. As Bitcoin holdings grow, the notional exposure available to write derivatives against grows with them, and the realized premium follows. The structure also means that revenue is correlated with Bitcoin price volatility. Quiet quarters with low implied volatility produce thinner option premiums. Q1 FY 2026 ran alongside a period where Bitcoin traded broadly in a $75,000 to $90,000 band, with realized volatility elevated by macro and policy noise. As of May 13, 2026, BTC sits at 80,806 stars, up 0.2% on the day. Context for investors: watching the playbook. Metaplanet has become the most visible Asian-listed analog to the US-based Bitcoin treasury model. Its strategy mirrors the issuance and accumulate pattern that Strategy pioneered. Raise capital through bond issuance and share offerings, use proceeds to buy spot Bitcoin, and report progress using both revenue and per-share Bitcoin metrics. The 251% revenue growth, while strong, comes off a much smaller base than Metaplanet's FY 2025 full-year result. Sequential comparisons quarter to quarter will matter more than the year-over-year headline as the firm scales. A 2.8% BTC yield in a single quarter annualizes to roughly 11% if sustained, a figure that would put Metaplanet ahead of most large public Bitcoin holders on a per-share accumulation basis. The risk profile has not changed. Metaplanet's balance sheet is heavily Bitcoin correlated. A sustained drawdown in BTC would compress both the mark-to-market value of holdings and the option income that flows from them.